Today, US financial markets are shut on the public holiday. Yesterday, the markets were thin and available for a shorter session. The benchmark stock indexes closed almost flat. Investors give priority to markets beyond the United States. The US stock market traded sluggishly yesterday, and still the major stock indexes extended the uptrend and closed a bit higher. The Dow Jones edged up by 10 points, the Nasdaq grew by 0.21%, the S&P closed 5 points up at 4,455 points. Futures on the stock indexes traded quietly today. The S&P500 is expected to trade in the intraday corridor between 4,440 and 4,470 points. Wall Street owes its gains on a Monday to the rally of Tesla shares and bank shares. Tesla shares jumped by 6.9% after the electric car maker said it delivered a record number of vehicles in the second quarter. Tesla said it shipped 466,140 vehicles last quarter, well above the consensus of around 450,000 deliveries. Meanwhile, the company said it had produced around 480,000 vehicles. The Tesla Model 3 and Model Y made up the bulk of shipments, with 447,000 vehicles sold across the two models. Model Y shipments are up a whopping 87% on the year. The strong increase in its shipments came after the company cut prices earlier this year. In addition, stocks of big banks rose after the companies raised the dividends by passing the Federal Reserve's annual stress test. Wells Fargo added 1.7%, Citigroup gained 1.5%, so the S&P 500 banking index rose by 1.5%. Next week, US banks will open the season of corporate reports for the second quarter. 9 of the 11 sectors of the S&P 500 were up, while healthcare and the high-tech were down by 0.8% and 0.3%. In terms of the fundamental environment, the manufacturing sector fell even further in June, reaching levels last seen when the economy was hurt by the first wave of the pandemic. The survey showed a similar decline in production in the euro area. On a Tuesday, US stock indexes remained stable because investors are celebrating. Mark Zuckerberg and Elon Musk owned the attention. Not so long ago, Musk and Zuckerberg incited each other to a mixed martial arts cage match in Las Vegas. The online confrontation did not last long. Now it looks like the story is developing. Meta Platforms plans to launch the Threads microblogging app, challenging Musk just days after Twitter's executive chairman announced a temporary cap on the number of posts users can read on the platform. On any other day, this could have affected mega-cap stocks, but not today. In addition to the corporate sector, inflation and the Fed continued to hold the market's attention. In the United States, analysts at Berkeley said in a note to clients that rise in real incomes driven by a strong labor market will continue to support consumption, despite recession signals from Monday's weak data. The minutes of the central bank's latest meeting are due on a Wednesday, and the document could provide further clues about policy direction, but also trigger some volatility. If the Fed decides to raise interest rates more than twice, then there are fears that the recession could be deeper than what's currently predicted. The bond market is closed on a Tuesday, but on a Monday, the US Treasury yield curve experienced its steepest inversion since Fed Chairman Paul Volcker's high inflation era in the early 1980s, reflecting financial markets' fears that a prolonged recovery cycle could lead to serious recession and stagnation. At the same time, after a successful first half of the year, analysts still share a rather optimistic forecast for the future of the stock market. BMO's chief investment officer predicts the S&P 500 could jump by another 13% to reach an all-time high by the end of the year on a stronger than expected earnings in high-tech and banking stocks. In his base case, the index will fluctuate around its current level until the end of the year, but in the fourth quarter it will exceed its current all-time high just below 4,800 points. 4,800 points. So our bullish target is 5,050 points, which marks a new high for the S&P 500, said chief investment strategist at BMO Capital. According to Morgan Stanley's chief economist, the U.S. will be able to avoid a recession thanks to a strong labor market that has withstood aggressive interest rate hikes by the Federal Reserve. In May, the U.S. economy added 339,000 jobs and employment hovered at just 3.7%. The number of vacancies decreased, but a large number of layoffs did not follow. It means that the Fed will be able to ensure a slowdown in the economy and ease inflationary pressure without a severe recession. In this context, a series of the data on Thursday and Friday will play a rather important role. The currency market is also trading quietly. The yen and the Australian dollar grabbed the spotlight. The US dollar index is hovering at around 103 in the intraday corridor between 102.70 and 103.10. The US dollar loosened its grip over the yen today as the market is voicing concern over the signs of a forex interventions. The dollar-yen pair traded at 144.38 and the yen has got stuck at 145.07, the weakest levels in 8 months, reached last week. So, Japan's finance minister warned the traders against the too robust selling of the yen. Japan's chief financial diplomat Masato Kanda said on Tuesday that officials are engaged in the talks with the U.S. Treasury Secretary Janet Yellen and other foreign authorities almost every day about currencies and broader financial markets. This sends signals that a coordinated intervention may take place as the yen continues to hover above 144 yen per dollar. Unlike an unilateral intervention, this one has a more lasting effect on the yen. The Reserve Bank of Australia was in the focus of attention. The regulator capped interest rates at 4.10% on Tuesday, saying it needed more time to assess the impact of previous rate hikes, but warned that further tightening might be needed to curb inflation. The Australian dollar rose by 0.28% to 0.6680 against the greenback. Market activity on Tuesday was low, while America was resting, and the euro slipped by 0.12% against the dollar. The pound sterling gained 0.2%. The Canadian dollar asserted its strength against the US dollar after the public holiday in Canada. The USD CAD pair dropped by 0.2% to trade at 1.3219, and the intraday corridor for the instrument is seen between 1.3190 and 1.3240. As the US dollar came to a standstill, oil prices helped the loonie gain ground. Oil prices went up yesterday as the market assessed supply cuts announced by Saudi Arabia and Russia from August amid poor prospects of the global economy. Brent crude futures rose by 85 cents or 1.7% to trade at $75.97 a barrel. WTI futures grew by 1.5% to trade at $70.87. Saudi Arabia said on Monday it would extend its voluntary 1 million barrels per day output cuts until August, while Russia and Algeria voluntarily to cut the August production and export rates by 500,000 and 20,000 barrels per day respectively. If fully implemented, this would result in a cumulative reduction in a production of 5.36 million barrels per day compared to the level of August last year. However, oil benchmark were down about 1% in the previous session after initially rising amid a bleak macro outlook. Business surveys showed a decline in the global manufacturing activity due to soft demand in China and Europe, while US production also fell in June. Analysts suggest that this broader uncertainty could overshadow OPEC Plus cutback efforts. It seems that is why oil prices didn't rise significantly on this news. The crypto market is trading on a pessimistic note. Bitcoin surpassed the 31,000, trying to cling to it, and the token traded at 31,050 or 0.2% down intraday. Popular altcoins are trading sluggishly and mixed. Ethereum, Binance and Cardano went down by 0.08 and 2.6%. Ripple, Solana and Litecoin grew by 0.06 and 0.9%. After rising on Monday, Bitcoin and Ethereum pulled back slightly from their highs and tried to gain a foothold at new heights. The ongoing saga surrounding the Bitcoin ETF has contributed to the previous rally of cryptocurrency assets. Specifically, Nasdaq resubmitted its SEC listing for the BlackRock Bitcoin ETF to add extra details. An updated filing application with the U.S. Securities and Exchange Commission states that Coinbase Global will provide market surveillance in support of the proposed ETF from the world's largest asset manager. The move comes after the regulator raised concerns that the original Nasdaq filings were unclear and incomplete. Coinbase shares jumped by 13% on Monday after exchange operator SBOE said it was working with a cryptocurrency company in an attempt to launch a Bitcoin spot exchange-traded fund. CBOE on a Friday refiled with the commission to launch a Bitcoin exchange-traded fund from a management company, Fidelity. Coinbase shares have more than doubled this year despite the standoff with the regulator. As for the intraday outlook, Bitcoin has finally got out on the borders of the previous range. It's now trying to stay afloat. If the token manages to rise to 31,400 and settle at this height, then the price can reach 32,000 with confidence. The alternative scenario looks like a pullback, first to 30,800 and then to $30,000. Thank you for watching. We are closely monitor the markets and provide you with the up-to-date financial information and analysis. We are waiting for your questions and comments. Subscribe to our channel and see you online tomorrow.